A very good evening, everyone. We are from MSc student from FBMP faculty. So today we're going to present assignment 1 poster presentation. So our topic today is basic accounting concept. So before I'm going into the presentation, let me introduce myself and my friends. So my name is Dachani Suresh.
My name is Tiruselvi Tanasigre.
And my name is Vinod Lakijendra.
My name is Prisha Munyandi.
So let's start our presentation starting with Tiruselvi.
Okay, first one is separate entity. Separate entity concept state that we should always separately record the transaction of a business and its owner. This concept is the most critical in regards to a sole proprietorship, since this is the situation in which is the affair of the owner and the business are most likely to intermingle. Example, like an owner cannot remove fund from a business without recording it as either a loan, compensation, or any equity distribution. Otherwise, the owner may buy something such as a real estate and leave it on a book of the business when in fact owner is treating is as a personal possession. Second one is going concern. Going concern concept is one of the accounting principles that state that a business entity will continue running its operation in the foreseeable future and will not liquidate it or forced to discontinue operation for any reason. Example, a state-owned company is in tough financial situation and is struggling to pay its debt. The government gives the company a bailout and guarantee all the payment to its creditor. The state-owned company is going concern despite its poor financial position. That's all from me. I pass it to next presenter.
Well, I'm going to present about money measurement. The money measurement concept states that a business should only record an accounting transaction if it can be expressed in terms of money. This indicates that quantitative information rather than qualitative information is the primary emphasis of accounting activities. Example, at the end of the year 2006, an organization may have a factory on a piece of land measuring 10 acres, office building containing 50 rooms, 50 personal computers, 50 office chairs and tables, 100 kg of raw materials, and etc. These are expressed in different units, but for accounting purposes, they are to be recorded in money terms in Ringgit Malaysia. Second one, I'm going to explain about objectivity concept. Objectivity concept in accounting states that the financial statements a company produces must be based on solid evidence. This guideline aims to prevent any personal opinions or prejudices from entering the financial statements through management and accounting. For example, the Monsanto company, based in the United States of America, violated accounting rules and the objectivity principle in 2016 by mistering the earnings of the company to internal accountants. The violation led to the firm paying an 80 million penalty. I'll pass to the next person.
Okay, for my part is accrual concept. The accrual concept is an accounting concept that requires transaction to be recorded in the time period in which they are accrued, regardless of when their actual cash flow for the transaction are received. Example, if a company has performed a service for a customer but has not yet received payment, the revenue from the service will be recorded as an accrual in the company financial statement. This ensures that the company financial statement accurately reflects its true financial position even if it has not yet received payment for all of the service it has provided. For the next one is materiality concept. Materiality is an accounting principle which state that all items that are reasonably likely to impact investor decision making must be recorded or reported in details in the business financial statement using GAAP standard. Example, expensing versus discrediting. Imagine a company purchases an electric pencil sharpener for RM 10 ringgit. Typically, the sharpener should be recorded as an asset and then depreciationally expense should be recorded to full useful lives. However, materiality allows you to expense the entire RM 10 ringgit at once. In the scenario, you'll be able to expense the entire transaction at once because the information is immaterial. Recording the transaction this way is unlikely to impact the decision-making process of investor. Therefore, the RM Tringgit cost of the pencil sharpener is immaterial. Okay, I pass to the next presentation.
So next is consistency concept. The consistency guideline expressed that business ought to keep up with similar bookkeeping techniques or standard all through the bookkeeping period. So clients of the budget reports or data can make a significant ends from the information. Like we can even example like of this could be a point at which we're painting a wall to accomplish a similar variety and the look in general. These make a uniform look and his general reality to make a similar variety or plan by a large. Or maybe I can give you another example like company A has been using declining balance depreciated method for its IT equipment. According to consistency concept, it should continue to use declining balance depreciation method is in respect of its IT equipment in the following periods. If the company wants to change it to another depreciation method, say for example the straight line method, it must provide its in financial report the reason for the change, the nature of the change and the effect of the change on items such as accumulation depreciation. So we are moving to the last. So comparability. Comparability is the level of normalization of accounting information that permits the fiscal summaries of various associations to be contrasted with one another. This is a key necessity of monetary necessary revealing by the client of budget reports. Financial statements are more practically identical when similar accounting policies and accounting standards are applied across numerous revealing periods as well as across various substances inside an industry. For instance, assuming various oil and gas firms really apply similar industry explicit accounting norms to their fiscal summaries, then there ought to be an elevated degree of likeness inside that industry. Example, if a number of oil and gas firms consistent apply the same industry specific accounting standard to their financial statement, then there should be a high level of comparability within that industry. Thank you. So we will move on to the conclusion.
In conclusion, in the end, the aim of accounting is to keep systematic records to ascertain finance performance and financial position of an entity and to communicate the relevant financial information to the interested user groups. That's all from our groups. Thank you.